Well, the stock of the moment undoubtedly is Polycab. It's a 5% rally now on that stock, 70% higher for the year. And definitely, in the last 1 year, as I was mentioning, it's been a doubling of the stock. Very good numbers. Revenues surged 42%, while margins have also expanded. Gandharv Tongia, who's the Executive Director and Chief Financial Officer at Polycab India, joins us now to talk more about that. Gandharv, thanks a lot for joining in. It's been a stellar quarter for you. So I want to first start by asking you what the volume growth has been in this quarter in the cables and wires business, and what kind of volume growth are you penciling in for the full year of FY24, given that demand has come back in a big way?
Thank you so much for having us. This was the best ever first quarter performance of the company in its history. We did almost 3,900 crore rupees of top line. 90% of that comes from cable and wire, where the volume growth is ranging between 50% to 60%. And in terms of value, it is around in mid-40s. We started working on Project Leap almost 2 years back, and there were several strategic initiatives which we have implemented under Project Leap in last 7-8 quarters. And what volume growth we are witnessing now is, in a way, outcome of those initiatives, plus the spend which is there by government, both central and state, and private Capex, which has improved in the recent past. We believe as part of Project Leap, we should be able to get to 20,000 crore rupees of top line by fiscal 26. And it's quite possible that 2-3 quarters down the line, we recalibrate that guidance and advance the term of 2026 to a period which is going to be sooner than 2026.
So this 50 to 60% volume growth that you said in the cables and wires business, that is for this quarter, right? The Q1?
Yes.
And
Q1
what is the
compared with
expectation?
Q1 of the last year.
Okay, got it. And what is the expectation for the full year? What kind of growth are you looking at on the volumes?
So, as part of Project Leap, when we started working on this 5-year transformation, we had annual number of around 9,000 crore rupees in fiscal 21. And we set a target of 20,000 crore rupees by fiscal 26. By fiscal 23, we had already achieved a top line of 14,000 crore rupees. So we should be able to get to 20,000 crore rupees certainly by FY26, or it's quite possible that we are able to do it sooner than FY26. I won't be able to give you a quarterly guidance because we don't generally give quarterly guidance.
Okay, all right. Well, Mr. Tongia, first of all, congratulations on a solid set of numbers. The last few quarters when we've spoken, you've been talking about this 20,000 crores odd, and now you're indicating maybe it comes a little bit sooner as well. So we'll stay tuned to that for the coming years. But another big highlight of your numbers was the margins. If I focus on the largest part of your business, which is cables and wires itself, you have been guiding for around 11 to 13%. But this quarter, it's coming at around 15%. Is it a one-off? Would you like to revise that guidance higher? And also in terms of a blended margin, that as well is coming at around 14%. So I want your guidance on both these two numbers going ahead from here.
So we have 90% of business, which is cable and wire, where we have, in a way, two type of businesses. One is a B2B cable business, with generally anywhere between 9 to 11% EBITDA margin, and the wires business, which is in mid-teens. Whenever there is a favorable shift towards wires business or B2C business, our blended margins are better. We believe on a sustainable basis in cable and wire, we can target a number between 12 to 14% EBITDA margin. Coming to the balance 10% FMEG, it is still slightly softer, but we are taking strategic initiatives, and we believe we should be able to comfortably get to 10% of EBITDA margin in FMEG by fiscal 26.
All right, just a quick counter question. So now it appears that on the cables and wires business, from around 11 to 13%, you're up that to around 12 to 14%. So the band has moved up a little bit. Talking about the FMEG business, what's the number that we should look at out there? In which quarter does it move back into the black? That's profitability. And also, what kind of growth are you looking at in this particular vertical? The smaller part of the business is 10%.
Directionally, we want to be in top 3 companies in which our business we have presence. In FMEG, we have businesses like fan and lighting. We also have presence in switches and switchgear and retail wires. The retail wires, we are already a market leader. For other businesses, we are taking initiatives to get to top 3 over the period. In terms of the margins improvement, we believe in the subsequent quarter, the current fiscal itself, we should be able to get to better numbers. And as I mentioned a while back, by fiscal 26, we should be able to get to 10% of EBITDA margin.
But that's very far away. That's very far away, Mr. Tongia. I want to know in the near term, Which quarter do you get into profitability, and what is the growth you're looking at for this year, FY24 itself?
Yeah, that's an interesting one. And as you know, we as a company, we don't give quarterly guidance. What I can certainly highlight to you is that over the period, quarter after quarter, you should see improvement in the margins, generally speaking, on FMEG space. And very comfortably, we should be able to get to 10% of EBITDA margin in FMEG by fiscal 26.
Mr. Tongia, good morning and congratulations, strong set. I have a few questions on numbers, but I just want to wrap up that the 90% of the business, cables and wires. You've given us the numbers there, but what's happening in the market? I mean, you're doing very well. Just want to understand the drivers. Demand is strong, but what's competition doing? How are you gaining? You seem to be gaining share as well. So just qualitatively, what's going on?
So let me give you 2-3 highlights. Let me talk about the domestic business, and then I'll come to international business in a while. As far as domestic business is concerned, we are known for our quality and availability. We have the largest manufacturing facility, and we have all the SKUs which one can think of on cable and wire side. It includes power, data, special cable. There is a robust demand both from private as well as government side. You would have already noticed that central government has taken initiative to utilize the budgets which they have earmarked for infrastructure and other development projects. And most of it is what they are trying to utilize by December, which is also resulting into a better demand environment from government. On the private side, most of the listed companies have announced Capex. Many of the companies have reported better order books, and they are also trying to implement projects at a rate which is slightly better than what they used to in earlier period. And that macro is converting into a better demand environment for us because we have the best-in-class facility. We are known for quality. We have almost 4,500 dealers and distributors. And whenever there is a demand, we are able to quickly supply. As part of Project Lead, what we did in the last 2 years is we have revisited our GTM. There were few dealers and distributors who were not necessarily playing the best game. We have supported them. We have improved our processes. Earlier, we used to take, for example, 3x of the current time what we are taking in terms of TAT, in terms of giving quotation. And we are using digital in a very meaningful manner. So there's a combination of several initiatives which have helped us in improving our domestic market share. On international side, which contributes almost 10% to our top line, we are working both on distribution. We have presence in countries like US, Australia, Spain, and we are also working with the EPC large players, and we are regular suppliers for them.
Okay. Mr. Tongia, got that. So that's a lot of changes and improvements that you're making. Just now coming back to some numbers, the cash conversion cycle has gone up for you by some 27 days. It's now at about 73 days of sales at the end of the June quarter. Inventory has gone up by about 550 crores to 82 days of sales. This was 62 at the end of the previous March quarter. Could you tell us what happened and guide us on both these matrices?
Sure. So we are the largest consumer of copper in the country, and almost all of it is imported from international suppliers. Two of the large smelters were planning to go for a shutdown as part of their annual maintenance, and that is the reason why we have upped our inventory levels of copper. This is momentary. I think it's a matter of a quarter or two, and after that we should be able to go back to our regular working capital cycle, which is generally between 50 to 60 days.
Okay, I have a couple of questions for you before I move to Mr. Inder Jaisinghani, who's the Chairman and Managing Director of the company. He's joining in now as well. Mr. Jaisinghani, welcome to the show. I'll just come to you in a bit, but before that, I wanted to complete the conversation with Mr. Tongia as well. Mr. Tongia, you earlier said that you will achieve 20,000 crores revenues by FY26. Can you give us a slightly near-term target by the end of FY24? What will the revenue growth be? Earlier, I think you had mentioned you'll do 15% revenue growth by the end of FY24. Would you want to scale that guidance up?
As I mentioned a while back, we won't be able to give you annual guidance, but I can give you a bit of a color. We believe we would continue to provide industry-leading growth, and that number has to be in double digit. And it's quite possible that in few quarters from now, we come back and recalibrate that 20,000 crore rupees guidance, which was due by FY26.
Okay. And on the Capex front, can you give me a number as well? I mean, you had guided for 600-700 crores of Capex for the full year. how much have you spent already? And given that demand is so strong, right? I mean, 50-60% growth in volumes is not a joke. Would you want to scale your Capex higher?
As of now, we are continuing the same guidance of around 600 crore rupees, 500 to 600 crore rupees. We are going to use it for setting up EHV facility for some exports units and a bit of a Capex in the form of maintenance, as well as for FMEG. We don't need to necessarily up the guidance at this stage.
Okay, all right. Let's get in Mr. Jaisinghani as well into the conversation. Well, sir, I wanted to ask you a two-part question. One is, Mr. Tongia has been talking to us and sounding so optimistic about the way you all are growing. Have you all gained market share? Point number one, if you could tell us that. Are you outgrowing the market? And point number two, on exports, the current contribution is around 9%. What do you end this year with? I think last year exports was close to around 1,380 crores odd.
Market, we will gain at least 2% more in this year.
Okay.
And we are building a capacity because export require huge quantities and big markets. So we are adding the Capex and putting a new factory for that. And demand is good. We can, in future, at least be doing 17 to 18% continuously for export market.
Okay, so you're saying export contribution from 9% this year will move up to around 11%, the 2 percentage point increase. Is that correct?
Yeah, right.
And later on, you'll look at mid-teens in terms of contribution from the exports, right?
Yeah.
Is this EPC driven?
No, it is not EPC driven. It's a pure material supply to EPC big contractors of the world who are taking contact with the Korean and Japanese and Americans and Spanish. A lot of contact are there, which we are dealing with them and we are supplying to them.
Okay. And what about on the domestic front? Market share gain? Was that evident? Have you outgrown the market?
Yeah, this time we have market gain is around about 1.5%. More we are taking now. And we are basically looking for a best supply chain and logistic, how to reach to the customer and how to rotate fastest material of the distributor. And we are looking for that.
Okay, Mr. Jaisinghani and Mr. Tongia, thanks a lot for joining in. Appreciate your time here and the kind of wealth that you have created for investors. All the best for the future. That's Polycab, one of the biggest stocks this year and in the last many years. Of course, 20,000 crore revenue is their target by FY26, and they talk about how demand has been very, very strong.